Just a few years ago, Novo Nordisk became one of the most powerful pharmaceutical companies in the world. Driven by Ozempic, Wegovy, and the explosive rise of GLP-1 drugs. The company wasn't just selling medicine. It was reshaping the future of obesity and diabetes treatment. But in 2026, the landscape is starting to change. Competition is intensifying. Pricing pressure is rising. And investors are beginning to ask a very important question. Can Novo Nordisk still defend its GLP-1 empire? In this video, we'll break down Novo Nordisk's Q1 2026 financial performance, the growth of Wegovy, the risks from competitors, future pipeline opportunities, and whether Novo Nordisk stock still deserves its premium valuation. Valuation matters because even a great company can become a poor investment if investors pay too much for it. A strong business does not automatically mean the stock is undervalued. That's why valuation is important. It helps investors estimate whether the current stock price is reasonable compared to the company's actual business performance and long-term potential. In the case of Novo Nordisk, valuation becomes even more important because market expectations for the GLP-1 industry have been extremely high for several years. And when expectations become too optimistic, even strong financial results may not be enough to support the stock price. On the other hand, when market sentiment becomes overly pessimistic, valuation can help investors identify opportunities where the stock may be trading below its reasonable value. Because in the long run, investment returns are influenced not only by business performance, but also by the price investors pay for the business. Fair value is the reasonable value of a company at a certain point in time, based on the company's financial performance, profitability, growth expectations, and overall business condition during that period. And because business conditions continuously change, fair value can also change over time. In the case of Novo Nordisk, I primarily use the company's fiscal year-end performance as the foundation for valuation analysis. The objective is to reduce short-term market noise, temporary sentiment shifts, and quarter-to-quarter volatility that can distort the stock price in the short term. Because while market sentiment can move stock prices temporarily, over the long term, business fundamentals usually matter the most. Now let's talk about how to read the valuation slide for Novo Nordisk. This valuation model uses three different PE multiple scenarios: conservative, historical, and optimistic. The purpose is not to predict an exact stock price, but to estimate a reasonable valuation range based on different market expectations. Let's start with the conservative scenario. Here, the stock is valued at a PE multiple of 12.79, which results in an estimated value of around $44 per share. This scenario assumes slower growth, higher competition pressure, and lower market expectations for the future GLP-1 business. Next is the historical valuation. This uses Novo Nordisk's longer-term historical PE multiple of 26.44, resulting in a fair value estimate of around $90 per share. In this case, the market assumes Novo continues to grow at a healthy pace while maintaining strong profitability and leadership in the obesity treatment market. And finally, the optimistic scenario. This uses a PE multiple of 39.12, which implies a valuation of approximately $134 per share. This scenario reflects stronger long-term growth expectations, continued GLP-1 dominance, and higher investor confidence in Novo Nordisk's future expansion. So how should investors interpret this? The conservative valuation can be viewed as a downside scenario. The optimistic valuation represents a high expectation scenario. And the historical valuation is often used as a balanced reference point based on Novo Nordisk's long-term business performance. In this analysis, the estimated fair value for Novo Nordisk is around $90 per share based on its historical valuation range. But it's important to remember, fair value is not fixed. It can change over time as the company's financial performance, growth outlook, competition, and overall business conditions evolve. Novo Nordisk is one of the largest pharmaceutical companies in the world, specializing in diabetes care, obesity treatment, and other serious chronic diseases. Founded in Denmark more than a century ago, the company has built one of the strongest healthcare franchises globally. Today, Novo Nordisk operates in more than 170 countries and serves millions of patients worldwide. For many years, the company was primarily known as a global leader in insulin and diabetes treatment. But over the last several years, Novo Nordisk has undergone a major transformation. Driven by GLP-1 therapies such as Ozempic and Wegovy, the company has become one of the most important players in the global obesity treatment market. Today, Novo Nordisk's business is mainly divided into three core segments: obesity care, diabetes care, and rare disease treatments. Among them, obesity care has become the company's fastest-growing business segment, supported by rapidly increasing global demand for weight loss therapies. This is one of the main reasons why Novo Nordisk has attracted enormous investor attention in recent years. Because many analysts believe GLP-1 drugs could fundamentally reshape the future of metabolic healthcare. And as obesity and diabetes continue to rise globally, Novo Nordisk is positioned at the center of one of the largest healthcare opportunities in the world. However, competition is also becoming increasingly intense, especially from companies like Eli Lilly, which are aggressively expanding their own obesity treatment pipelines. And that is why understanding Novo Nordisk's business fundamentals is extremely important before analyzing the valuation and long-term investment potential of Novo Nordisk stock. Today, Novo Nordisk holds one of the strongest positions in the global obesity and diabetes treatment market. Driven by blockbuster GLP-1 therapies such as Ozempic and Wegovy, the company has become one of the most closely watched pharmaceutical businesses in the world. Why is the market paying so much attention to Novo Nordisk? Because many investors believe the GLP-1 industry could become one of the largest opportunities in modern healthcare. As obesity and diabetes continue to rise globally, demand for effective metabolic treatments is growing rapidly. And Novo Nordisk is currently positioned at the center of that trend. The company benefits from strong brand recognition, global manufacturing scale, deep physician relationships, and decades of expertise in metabolic disease treatment. However, competition is also becoming increasingly intense, especially from Eli Lilly and other pharmaceutical companies aggressively expanding their own obesity treatment pipelines. And that is why Novo Nordisk remains one of the most important companies to watch in the healthcare sector today. During the first quarter of 2026, Novo Nordisk continued to demonstrate the strength of its business, supported by strong global demand for GLP-1 therapies. The company delivered solid revenue growth, driven primarily by Wegovy, Ozempic, and its expanding obesity care portfolio. Obesity care remained the largest growth contributor, while diabetes care continued to provide a stable foundation for the business. However, Q1 2026 was not only about strong headline numbers. Investors also began paying closer attention to several important challenges facing the company. Competition within the GLP-1 market is becoming increasingly aggressive. Pricing pressure is rising, especially in the United States. And market expectations for long-term growth are gradually becoming more realistic after several years of extraordinary optimism. Despite these concerns, Novo Nordisk continues to maintain one of the strongest profitability profiles in the pharmaceutical industry. The company generates high operating margins, strong free cash flow, and substantial returns on capital. Financially, Novo Nordisk remains in a very strong position, with the ability to continue investing in manufacturing expansion, research and development, and next-generation obesity treatments. But as the GLP-1 industry evolves, investors are no longer focusing only on growth. The market is now paying closer attention to margin sustainability, competitive positioning, future pipeline execution, and Novo Nordisk's long-term ability to defend its leadership in the global obesity treatment market. In 2026, the global diabetes and obesity treatment market continues to expand rapidly. Rising obesity rates, aging populations, and increasing awareness of metabolic health are driving long-term demand for more effective treatments. And at the center of this transformation is the GLP-1 industry. What was once considered primarily a diabetes treatment category has now become one of the most important growth markets in the pharmaceutical industry. Today, Novo Nordisk remains one of the dominant players in this market. Products such as Ozempic, Wegovy, and Rybelsus continue to see strong global demand, supported by physician adoption and growing patient awareness. However, the competitive landscape is becoming increasingly aggressive in 2026. Competition is no longer focused only on current products. The market is now shifting toward the next generation of obesity and diabetes therapies currently being developed in the pipeline. Novo Nordisk continues investing heavily in oral GLP-1 treatments, higher-dose obesity drugs, and next-generation combination therapies designed to improve efficacy and long-term patient outcomes. As a result, the future competitive landscape may depend not only on current sales performance, but on which companies can continue delivering superior innovation over the next decade. Another major issue facing the industry in 2026 is pricing pressure. As GLP-1 treatments become more widely used, governments, insurance companies, and healthcare systems are becoming increasingly focused on affordability and reimbursement costs. This could create additional pressure on pricing, profit margins, and long-term profitability across the industry. Despite these challenges, the long-term opportunity for the diabetes and obesity treatment market remains enormous. Millions of patients worldwide still lack access to effective metabolic health care. And many analysts believe the GLP-1 market is still only in the early stages of long-term global expansion. That is why major pharmaceutical companies continue investing aggressively in manufacturing capacity, research and development, and future pipeline innovation. Because the companies that successfully lead the next generation of metabolic healthcare could dominate one of the largest pharmaceutical opportunities in modern history. Now, let's take a look at a small portion of Novo Nordisk's financial ratios for fiscal years 2025 and 2024. Let's take a closer look at several key financial ratios for Novo Nordisk in fiscal years 2025 and 2024. Starting with gross margin. In FY 2025, Novo Nordisk reported a gross margin of 80.98%. Compared with 84.67% in FY 2024. The decline mainly reflects increasing pricing pressure, changes in product mix, higher manufacturing and supply chain costs, and the growing impact of rebates and discounts, particularly in the United States. Even so, an 80% gross margin remains exceptionally high for the pharmaceutical industry, and continues to highlight the strong profitability of Novo Nordisk's GLP-1 business. Next, return on invested capital, or ROIC. ROIC declined from 53.09% in FY 2024 to 36.67% in FY 2025. Although the ratio decreased significantly, the number still reflects an extremely efficient business. The decline was largely driven by higher capital investments, including manufacturing expansion and supply capacity investments to support future GLP-1 demand growth. In other words, Novo Nordisk is reinvesting aggressively to strengthen its long-term position in the obesity and diabetes treatment market. Now let's look at free cash flow margin. FCF margin declined sharply from 28.12% in FY 2024 to 8.17% in FY 2025. This decrease was primarily caused by large capital expenditures, manufacturing expansion, and increased operational investments related to production capacity and future growth initiatives. While lower free cash flow margins may concern some investors in the short term, it also reflects the company's aggressive investment cycle during a period of rapidly growing global demand. And finally, interest coverage. Novo Nordisk's interest coverage ratio declined from 242 times in FY 2024 to 82 times in FY 2025. The decline mainly came from higher interest expenses and normalization in operating profitability. However, even at 82 times, Novo Nordisk still maintains an extremely strong financial position with very low financial risk. Overall, these financial ratios show that while profitability and efficiency moderated in FY 2025 compared to the extraordinary levels seen in FY 2024, Novo Nordisk remains one of the strongest and most profitable pharmaceutical companies in the world. Looking ahead, there are several important factors that could potentially drive Novo Nordisk's business and stock performance in the future. First, continued global growth in the obesity treatment market. Obesity is becoming one of the largest long-term healthcare challenges worldwide. And as awareness increases, demand for effective GLP-1 therapies could continue expanding for many years. Second, strong long-term demand for Wegovy and other GLP-1 products. Despite growing competition, Novo Nordisk still maintains one of the strongest product portfolios in the metabolic healthcare industry. And broader adoption across international markets could provide additional growth opportunities going forward. Third, future pipeline innovation. Novo Nordisk continues investing heavily in oral GLP-1 treatments, higher-dose obesity therapies, and next-generation combination drugs. If these future treatments demonstrate strong clinical results, they could strengthen the company's long-term competitive position. Fourth, manufacturing expansion. One of the biggest challenges in the GLP-1 industry has been supply capacity. Novo Nordisk is aggressively expanding manufacturing capabilities to support future demand growth. And over time, improved supply availability could help accelerate global sales growth. Fifth, improving market sentiment. Over the past several years, market expectations for the GLP-1 industry have become extremely volatile. If investor concerns regarding competition, pricing pressure, or slowing growth begin to stabilize, valuation sentiment toward Novo Nordisk could gradually improve. And finally, the long-term structural healthcare opportunity remains enormous. Millions of patients worldwide still lack access to effective obesity and diabetes treatments. And if GLP-1 therapies continue demonstrating long-term health benefits beyond weight loss, the total addressable market for companies like Novo Nordisk could become significantly larger in the future. While Novo Nordisk still has strong long-term potential, there are also several important risks that could weaken the stock going forward. First, intensifying competition in the GLP-1 market. The obesity and diabetes treatment industry is becoming increasingly competitive, with multiple pharmaceutical companies aggressively developing new therapies and expanding their pipelines. As competition increases, Novo Nordisk could face pressure on market share, pricing power, and long-term growth expectations. Second, pricing pressure and reimbursement risk. As GLP-1 treatments become more widely adopted, governments, insurance companies, and healthcare providers are becoming increasingly focused on treatment affordability. This could lead to higher rebates, lower reimbursement rates, and additional pressure on profit margins over time. Third, slowing growth expectations. Over the last several years, Novo Nordisk experienced extraordinary growth driven by the rapid success of Wegovy and Ozempic. However, as the business becomes larger, maintaining the same level of growth may become increasingly difficult. And if revenue growth begins slowing faster than expected, market sentiment toward the stock could weaken further. Fourth, pipeline execution risk. The long-term future of the company depends heavily on continued innovation. If future pipeline products fail to meet expectations, experience regulatory delays, or show weaker clinical results, investor confidence could decline significantly. Fifth, manufacturing and supply chain challenges. The GLP-1 industry requires large-scale manufacturing capacity. Any production disruptions, supply shortages, or delays in expansion projects could negatively impact sales growth and market positioning. Sixth, valuation compression. Even after the recent decline in Novo Nordisk stock, the market may continue reassessing long-term growth expectations for the GLP-1 industry. And if investors become more cautious about future profitability or competitive risks, valuation multiples could remain under pressure. And finally, market sentiment itself remains an important factor. Because in the short term, stock prices are often influenced not only by fundamentals, but also by investor psychology, expectations, and broader market conditions. Overall, Novo Nordisk remains one of the most important pharmaceutical companies in the world today. The company continues to benefit from strong global demand for GLP-1 therapies, high profitability, powerful cash flow generation, and long-term structural growth in obesity and diabetes treatment. At the same time, 2026 also marks an important transition period for the company. The market is becoming more competitive. Pricing pressure is increasing, and investor expectations are gradually becoming more realistic after several years of extraordinary growth. This means the future performance of Novo Nordisk stock may depend not only on continued revenue growth, but also on Novo Nordisk's ability to protect market share, maintain profitability, expand manufacturing capacity, and successfully execute its next-generation pipeline strategy. For long-term investors, the key question is no longer whether the GLP-1 market is large. The opportunity is clearly enormous. The real question is, can Novo Nordisk continue defending its leadership position as the industry becomes more competitive over time? Because in the long run, the companies that successfully combine innovation, scale, execution, and profitability are usually the ones that create the greatest long-term shareholder value. And that is why Novo Nordisk remains one of the most closely watched healthcare companies in the world today. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching, and if you enjoyed this analysis, don't forget to like, subscribe, and share your thoughts in the comments below.